very fortunate to have with us today three panelists who did participate in part one of this seminar. The first person who is going to speak this morning is Benjamin Siracusa Hillman, Esquire, and he is a partner with Shaheen and Gordon. We also have Paula Daley DePlanche, who is a vice president and partner at Leone, McDonnell and Roberts, PA. They're an accounting firm. And also we have Timothy Dargan, who is a senior vice president and senior commercial loan officer, and he is with First Seacoast Bank. So we're going to start it off with Ben. He'll hand it off to Paula, and then Tim might want to weigh in with his own remarks, and then we'll get to your questions. So Ben, if you would please take it away. I'm going to unmute myself, but we will keep an eye on the chat and the Q&A. And just remember, again, it's being recorded.
Great. And can everybody see the screen at this point?
Yes.
Excellent. And can everyone hear me okay? Great. All right. Well, it's nice to be back with everybody as we wander through the PPP loan program together. I'm sure everyone's seen the numerous articles in the media about how challenging and difficult the program has been for small businesses. Initially, it was just simply getting a loan. And now it's, sorting through the forgiveness. And I think for some larger entities, whether they got the loan properly and have to give it back. Fortunately, there was a rule that was released a couple weeks ago now that said that if your loan amount was under $2 million, which I think would be applicable for most of the loans and probably most of the folks on this call, that you were presumed to be in need of the loan. So that I think caused a lot of people to breathe a sigh of relief as to whether, are they going to have to prove that their business is at a sufficient level of distress in order to have qualified for the loan. And I think the answer is if you have below 2 million, you're presumed to have qualified. Obviously assuming the information you provided in the application was accurate. So I'm going to talk today primarily about, the whole presentation is about forgiveness. My part is going to focus primarily on the first part of forgiveness, which is which expenses qualify, the timing of when those expenses are paid and incurred, and then some tips and reminders about that. Paula is going to focus her presentation primarily on the circumstances in which a business would have a reduction in their forgiveness amount as a result of having reduced their headcount or having reduced salaries. And so, both of us, I think, though, will be available to answer questions when we get into the question and answer part. And as was mentioned, Tim, an SBA lender, is here as well to answer questions from the bank side. All right, so let's get into it. So my part is going to cover, as I said, primarily which expenses qualify and the timing of those expenses. So an important disclaimer before we start, this presentation does not give legal advice, but general information. There's a lot of, even after the application was issued last week, there's a lot of ambiguities that remain in the rules and the guidance that the federal government has provided to date. That guidance has changed over time, and there's potential new legislation in the works. So that is to say, this is a very fluid situation. We'll try to give as accurate information as we can here today, but you should always consult your own attorney or accountant with questions related to your own business. So big picture, what expenses qualify for forgiveness? We've got two categories of expenses, payroll costs and everything else, which the program calls non-payroll costs. So big picture, you can get forgiveness of payroll costs that are paid during the 56-day covered period. That is the 56-day period that starts the day the loan was dispersed, or what's called the alternative payroll covered period, which I'm going to discuss later. You also can get forgiveness of expenses that were incurred during the last pay cycle of the chosen period and that are paid on or before the next regular payroll date. So this is a significant clarification in the application itself. It's not just costs that are both paid and incurred within the period of time, as people had worried about, well, wait a minute, when I have somebody work and then they get paid on a pay date that's a week later, what if that's outside the pay period and outside the covered period, and the person I'm paying at the beginning of the covered period, that's for work that was done before the covered period. So how do I count this and get my 8 weeks? And the answer is it's a borrower-friendly definition. It's paid or incurred. For eligible non-payroll costs, same thing, either paid during the 56-day covered period or incurred during the covered period and paid on or before the next billing date. And again, we'll get into some examples of that. And at least 75% of the amount forgiven must be for payroll costs. And one moment, okay, sorry about that. Click the wrong button. Okay, so let's dig in. What are eligible payroll costs? So the rules are slightly different for corporations, C or S corporations versus sole proprietorships, independent contractors, and partnerships. So I'm going to talk in the first instance about corporations, and then in each spot I've clarified where the rules are different if you're not a corporation. So payroll costs are cash compensation, that is salary, wages, commissions, tips, paid leave, such as vacation, parental, family, medical, or sick leave, except where you've taken advantage of the new paid sick leave under the FFCRA and claimed a tax credit for that, so you don't get it twice, as well as allowances for separation or dismissal. So if you're paying employee severance, capped at $15,385 per employee. Now, where does that number come from? It's $100,000. Divided by 52 weeks times 8 weeks. So essentially it's 8 weeks worth of pay for someone who's paid at an annualized rate of $100,000 a year. And the rules don't care whether you pay them evenly across the pay periods or all at once or so on. It's just $15,385 per employee. For the sole proprietors, independent contractors, and partnerships, it's similar. It's wages, commissions, income, or net earnings from self-employment with that same cap. But in addition, the compensation for an owner is also capped at 8/52 of your 2019 net profit. And I think the idea here is if you're a business that's typically paying the owner, something less than an annualized rate of $100,000, they don't want you to take advantage of the PPP period to pay yourself more. So it's a pretty blunt instrument because 2019 may or may not have been a similar year to 2020, but there you have it. And when I say owner, I'm meaning a sole proprietor, a general partner of a partnership, basically the person who owns the entity and is paying compensation to themselves for their work. So that's a shorthand I'm going to use throughout the presentation so I don't have to keep repeating all those categories. Also included in payroll costs are employee benefits. Limited to the employer's share of payments for group healthcare benefits and the employer's share of retirement benefits payments. So you got to be careful if you're paying an employee and there's withholding from the employee's paycheck to go perhaps a voluntary deferral to a 401k plan or a mandatory share of health benefits. You're essentially getting forgiven for that because you're getting forgiven for the gross cash compensation. So you don't get to double dip and get that again when you send the check to the health benefit provider or the 401k administrator, but you do get to take the employer share that's on top of whatever you're paying the employee. For the sole proprietor, independent contractors, and partnerships, owner's benefits are not eligible, so you don't get to count money that's paid for the owner's health care or the owner's retirement. Corporations, you can. And also the final category of payroll costs is state and local taxes assessed on employee compensation. This is like state unemployment or BET. And same rules. If you're paying for the owner, you're not eligible for forgiveness. Moving on to non-payroll costs. There's 3 big categories. There's interest on mortgage obligations, there's rent and lease obligations, and there's utility payments. So for mortgage obligations, this includes mortgages on real or personal property. And for all 3 categories, by the way, the obligation has to have been in force on February 15th, 2020. So you can't go out and rent a bunch of new buildings or incur a bunch of new debt and have it qualify. But if the obligation was in force on February 15th and it's carrying now, you're okay. In the mortgage category, even though we don't typically call a secured loan on personal property, like an auto loan on a company car, a mortgage in colloquial speak, that is included in the definition. So it's secured debt on real property, secured debt on personal property. For rent and lease obligations, just like what it sounds, rent for your office, business equipment lease, if you're leasing a copier or a computer or something like that, and utility payments, which are defined as payments for electricity, gas, water, transportation, telephone, or internet access. So this would include things like a fuel expense for a company car, payment for your corporate internet, your electricity, gas, or water utilities that are servicing your place of business. Digging into timing. For payroll costs, it's an 8-week period, 56 days, but you get a choice. So it's either the 56-day period that begins on the day your loan was dispersed, or you can elect instead to run the 56 days for payroll costs only from the first day of the first pay period following the loan disbursement date. So if you want to have your pay periods align with your forgiveness period, it certainly makes the math easier. You can elect that. However, as we'll discuss in a moment, it may be financially disadvantageous to do so. So you want to be careful in looking at what period you're choosing. For non-payroll costs, that 56-day period is going to begin on the disbursement date, regardless of what you elect for payroll costs. Now let's talk about paid or incurred. As I mentioned at the start, either expenses that are paid or expenses that are incurred count. So for payroll, all eligible costs paid during the chosen covered period are eligible. So, and the rules say that a payroll cost is paid on the date an ACH credit is initiated or the date the paycheck is distributed for people getting a paper paycheck. So, again, as we'll see in a moment, if your PPP period starts on April 22nd and you've got a payday on April 23rd, that's eligible, even though the time you're paying for is all time that was worked prior to the 56 days. In addition, eligible costs incurred during the covered period, but paid on or before the next regular payroll date after the covered period are also eligible. So for your final pay period within the 56 days, if you're paying after, at least the portion that you're incurring, the portion that is covering work performed during the 56-day period, those expenses are also eligible. And maybe it goes without saying, but you count payroll costs that are both paid and incurred only once. So I think typically you're going to be starting with paid, using all your costs paid during the 56 days, and then for that final pay cycle, using whatever you've incurred during the 56 days, but you're paying after. Because of the borrower-friendly interpretation of this rule, more than 8 weeks of payroll can actually be eligible for forgiveness. And in fact, an employer with a biweekly pay cycle and some lucky timing could have forgiveness of 5 pay periods and part of a 6th one. Before you get too excited, again, as a reminder, cash compensation is subject to that $15,385 per employee cap. So if you've got someone making $100,000 or more, after 4 full pay periods, you're going to hit that cap. Payment of health benefits, retirement benefits, and state and local taxes assessed on compensation are not subject to the cap, as we talked about earlier. But again, you have those limitations if you are not a corporation. So those are going to come into play and perhaps limit your forgiveness. Just to go through a bit of a specific example on timing, let's take an employer whose loan was dispersed on Wednesday, April 22nd, and who does not choose the alternative period. So the 56 days is going to run on June 16th, which is a Tuesday. Starts on a Wednesday, runs 8 weeks later, and ends on a Tuesday. And let's assume that you have, again, biweekly pay, 2-week pay periods, and payday is ordinarily the Thursday following. So I've sort of set out what 6 pay periods would be. We've got our first pay period there where the expenses are all incurred prior to the 56 days, but paid within it right at the beginning. So that counts. We've got payrolls 2, 3, and 4, where they're both incurred and paid within the pay period. We've got payroll 5, where it's incurred entirely within the period, and then it would be paid after, although for a reason I can discuss in a moment, I'm going to encourage you, if you do this, to pay during. And then you've got your final pay cycle, where the first 2 days of that cycle, June 15th and June 16th, they're within that 56-day period, even though the payday is not coming until July 2nd, 2.5 weeks later. So let's go through the example. First rule, include all expenses paid during the covered period. So that cycles 1, 2, 3, 4, and 5. And again, in my example, I'm moving the payday on cycle 5 2 days earlier than normal. The rules are not the reason I'm doing that, the rules are not entirely clear as to whether you get to use more than one pay period for a pay date that's after the pay period, after the 56 days. So for that reason, I'm going to move it back so I just don't have to worry about that issue. And then I also get to include expenses incurred during the last pay period of the covered period and paid on the next payroll date. And for me, that's the first 2 days of cycle 6. That's June 15th and June 16th. And that are paid on or before July 2nd. So obviously in my July 2nd pay cycle, I'm limited to only what was, the work performed on the first 2 days. I'm obviously limited to my caps. So I may not be getting much out of that, but there still could be something. Non-payroll costs, same concept, but a little simpler to administer. All eligible costs paid during the covered period are eligible, and all eligible costs incurred during the covered period but paid on or before the next regular billing date, so you got to pay it on time, are also eligible even if that billing date is after the covered period. And again, like with payroll, you count the costs that are both paid and incurred only once. So let's go through an example for non-payroll costs. Same April 22nd to June 16th timeframe. So let's say your electric bill runs on a nice monthly cycle and is due or at least paid 2 weeks after the month ends. So you've got April 1st to 30th that you pay on May 15th, counts for forgiveness because it's paid during the covered period. You've got May 1st to 31st that's paid on June 15th, counts for forgiveness because it's paid during the covered period. And you've got June 1st to 30th, not paid until July 15th. A little over half of that is incurred during the covered period. So even though you're paying it after, it's eligible for forgiveness. You got to prorate to the part that was incurred during the covered period. The rules don't give any specific guidance on proration. So I think if it's, you got to assume a reasonable amount, a reasonable method, for proration. If it's something like an electric bill where you don't know what was incurred day by day, presumably a fraction, like taking the 53.33% like we have here would suffice. If it's something like an hours an employee is working and they work irregular hours during the pay period, so to go back to our example here, I think you've got to do what was actually worked on June 15th and 16th if those are not the same as the other days. So you've got to look at what was incurred during the 56-day covered period, but it's okay, again, if it's paid after the covered period. All right, we're getting to the end of my section here. I just want to give some tips and reminders. We've covered most of this already, but again, just to reiterate, at least 75% of the amount forgiven must be for payroll costs. If you can use the PPP funds obviously for both payroll and non-payroll costs, but when it comes to forgiveness, if more than 75% of them have been used for non-payroll costs, you're going to have a reduction in the amount of forgiveness you get so that it's a 75-25 ratio. Again, cash compensation, this is for everyone, corporations and non-corporations, is capped at $15,385 per employee across the entire period. You don't have to cap what you pay your employee, it's capping what's eligible for forgiveness. For those sole proprietors, independent contractors, and partnerships, again, for the owners or the general partners or the independent contractor, cash compensation is also capped at 850 seconds of your 2019 compensation. And for those reporting on Schedule C, it's defined as the net profit on line 31 of your 2019 Form 1040 Schedule C. And again, for the owners, retirement benefits, health benefits, and state taxes are not eligible. you are eligible when you pay those for your employees. Again, contributions by employees, such as to retirement or health benefits, don't count as an employer cost. Costs both paid and incurred count only once. And for those who choose the alternative payroll covered period, the non-payroll costs still use the regular covered period. That's all I've got for now. I've left my phone number and email address there if you have questions. And certainly we're going to be around for the seminar to answer questions in the Q&A. So with that, I will turn it over to Paula to talk about reductions for a reduction in FTE or salary. Over to you, Paula.
And if you don't mind, quite a few questions have come in while you were speaking. We're thinking it might make sense. Paula might address some of them, but if not, just so you don't kind of lose your flow, can we go through some of those?
Yeah, absolutely. Happy to do that.
Andrew Clark is asking, what about businesses that opened late in 2019? And he's specifically inquiring about owner compensation. So his business opened later in the year.
Yeah, that is a good question. I believe you are still limited, but I will do a little bit of looking during Paula's presentation and see if I can give a more specific answer to that.
Okay. So Andrew, stay tuned. And Greg is asking, first, before that, he's got two questions. What about property taxes? Is this considered a utility expense or part of your rent or mortgage?
I don't believe that property taxes count for forgiveness. Paula, do you concur with that?
I think what I've learned is lease document would have to be looked at to indicate how that rent is set up. That's what on a course I took on Wednesday, that was a question. So you have to look to the lease, and I don't know specifically, because it doesn't indicate in any of the statutes that, real estate taxes are part of it, but I don't know if you have a triple net lease or not. So.
Yeah, it's a good question. Certainly if you own the property, it's not. It right. Doesn't count. But even because it's only, even if it's paid through your mortgage, it's just interest on the mortgage. It's not principal. It's not escrowed right. amounts. But yeah, it doesn't specifically define beyond business rent.
No.
And then he had another question, actually two more. Will telephone expenses for employees located remotely at their homes, is this included or excluded as eligible utility expenses?
That is a good question. I guess one, and I think that would be something to ask your accountant for more specifically. I think that and Paula, you should feel free to chime in on this as well. First of all, the rules itself are not specific. I think that if that is an expense that you are typically and habitually reimbursing your employee for on a regular basis, they have a company cell phone or they have a company, phone line in effect installed at their home. And this isn't something you're doing specifically during the PPP time, I think that would be countable. If that's something, again, you're kind of ordinarily deducting on your business tax return as a business expense that the employee is getting reimbursed for. I think if you're sort of just doing it for this period of time, it wouldn't qualify as something that was sort of in service as of February 15th and being done.
I would agree, Ben.
Is the payroll portion of forgiveness capped at 75% of your total PPP loan?
It is not. So you could use up to 100% of the PPP loan purely on payroll expenses.
Okay. How do independent contractors pay themselves if they are commission earners? Can we just do 2 payments over the 8 weeks?
Yeah, that's fine. There's no restriction on the timing of the payments. They just have to be paid within the 56-day period, or in effect earned within the 56-day period and paid on for people using a regular payroll cycle the next regular date. I would say for someone who's an independent contractor or where the cycle is irregular, I think if you can kind of true it up at the end of the period and pay it on the last day of the period, you'll avoid any argument about whether it was incurred and paid on the next date. But in theory, if it was incurred within the period and it was paid after, that would be okay.
The only thing I would say on that piece, Ben, is if they're an independent contractor, excuse me, most likely they're filing as a sole proprietor. So that in effect, I believe they only have the 852s of the net income, and it doesn't matter what they pay themselves in the covered period or the So.
Yes, I would agree. So you're capped at the 15,385, and you're capped at the 850 seconds of what you paid yourself in 2019. But assuming if you paid yourself less than the 850 seconds of 2019, you could only take what you actually paid yourself, right? Or is your view, Paula, that you can actually claim the full 850 seconds even if you don't?
That's what
didn't actually earn it.
Learned. That's what I've learned. But
all right, I would defer to Paula on that one.
Yeah, I mean, that's what we've learned so far.
All right, Karen, hopefully that answered your question. And we have one, looks like this is the last one for now, Paul, and then we'll turn it over to you. This is from Art Guadano. Do owners of S-Corps fall under employee requirements for including benefits, taxes, et cetera?
Our understanding is yes, that corporations, S or C, are treated the same way under the rule.
Okay, Art, hopefully that satisfied your question. What we're going to do now, I'm going to mute myself and turn it over to Paula, and then please, oh, wait a minute, Andrew just chimed in. How do you report non-payroll costs like rent, where the 25% does not cover a full payment?
So I'm understanding this question as, you're using the PPP money and other money to make a rental payment, because the PPP money, or the 25% of it at least, is not adequate to fully cover your rent. So that's fine. In terms of how the mechanics of the application work, the application will ask for example, on line 3, the amount of business rent paid during the covered period. And there's a note that says you are not required to report payments that you do not want to include in the forgiveness amount. So if you've done your math out and you've determined, okay, my rent is $10,000 and 25% of my forgiveness amount is $7,500, and so I'm only going to do the $7,500, you would just put $7,500 on that line.
Okay, now Paula, we'll jump over to you, and then please keep the questions, keep them coming, and after Paula goes through her slides, we'll go through this again, because I'm sure more will come up as Paula speaks. So I'm going to mute myself. Paula, take it away.
Okay, I'm going to, hold on a minute, get my screen so that everybody has it. Okay, welcome everybody, and thank you for joining us. Ben, thank you for your thorough and comprehensive explanation of the expenses that do qualify. Mine isn't quite so exciting, because what I'm going to tell you is if these certain things are met, you're going to have to reduce the amounts of those expenses to have that portion of the forgiveness reduced. So what I'm again, like Ben, because we've basically just gotten this application last Friday evening. We've done our best to compile so that the information and suggestions that we're presenting are, our foundation, and that it's constantly changing still. So just bear with us, and I would recommend that you consult with your tax or legal advisor on any specific individual assistance that you may have. So what are the adjustments that potentially reduce loan forgiveness? I'm not sure if everybody has their loan application nice and handy near them like I do here, but I've referenced some of the lines and so forth because, once this webinar is complete, you can go back and look at it and hopefully assist you in the mechanics of some of these calculations. And I was trying to be thoughtful when I made up these in order to do that, because some of this stuff is, just a statement, but some of it, a lot of it is going to be calculations. So, so just put your seatbelt on, and I'm doing my best here. So again, the following areas are related to payroll costs only. And Ben had described those payroll costs, as in addition to being payroll, was the benefits of the employees as well. So the two of them are, one is the full-time equivalent employee reduction. So the full-time employee equivalent reduction is during your covered period, if your FTE employees, sorry, I've got to close down here. There we count during the covered period, or if you're choosing the alternative payroll covered period, is less than the FTE count for your chosen reference period, which is what you used for your PPP application. The second reduction amount is your salary or hourly wage reduction. So if you reduced certain employees' salary or hourly wages by more than 25% during your covered period or your alternative payroll period, you will have to reduce your costs. Okay, hold on a minute. Do I need to do anything if my FTE count has not changed? If you have not reduced, and I'm going backwards, and the reason for that is I felt like the FTE amounts were more applicable to people from what I've experienced than the salary reduction. So just bear with me, and that's why when you get into the application, you'll see the salary reduction first. I felt that the FTE piece was a little more, difficult, and I thought it would be better to cover that first. When you're looking at that loan application, those 11 pages and you're kind of glazed over, what you're going to do is you're going to start with the back form, and that's the worksheet. And the worksheet is the amount that, that worksheet is not required to be given to your loan officer. It's required for your own sanity, in my mind, in order to be able to figure out these calculations. So, so I just wanted to say that you're basically going to be working from the back sheet to the next sheet, which is the actual Schedule A, which will go to the bank, and then the first sheet, which is the application. So just keep that in mind while I'm talking, because that's how these calculations are going to work. So if you haven't reduced the number of employees or the average paid hours of your employees between Jan 1 of 20 to the end of your period that you've chosen, there's a box that you will check between lines 10 and 11 of the Schedule A, not the worksheet. So it's the middle one, and you're going to enter 1.0 on that line. This step, if you are able to check that box, that will eliminate the need for you to complete Schedule A, lines 11 and 12, as well as Schedule A worksheet, boxes 2 and 5. And if you're not looking at this, it's going to probably seem a little difficult. So like I said, that's why I said put the seatbelt on. So FTE has a safe harbor component to it. So you are exempt from the loan forgiveness reduction based on FTE employee levels if both the following are met. One, you reduced your FTE employee levels between February 15th, 2020 and through April 26, 2020, and by June 30, and it can be as late as June 30 on that particular day, you restored your FTE employee level back to the level that existed during the pay period that included February 15th. So again, those two criteria have to be met in order for that safe harbor to be applicable. there is a calculation in this loan application that will help you figure that out. There are also exceptions in this application to the FTE employee reduction. So if you've reduced your employees, there are certain exemptions here. But please be careful. You will need substantiation documentation. That will need to be submitted with it, your application. So any positions for which you make a good faith written offer to rehire an employee during the covered period or applicable period, whichever one, is rejected by the employee. So you tell them, you can have your job back, but then they reject it. They don't want it back. They decide they want to stay on unemployment or they found another position. You need to get that in writing. 2, any employee who during the period is fired for cause, voluntarily resigns, or voluntarily requests and receives a reduction of hours. Those can be the exceptions. Again, make sure those items are in writing. And then as part of the worksheet that you're going to fill out, these FTEs will be included on table 1 only if the position is not filled with a new employee. So when you, like I said, when you get into these actual filling out these worksheets and forms, please, try to use these, as a gauge. What information should I have available when I am ready to calculate the FTE reduction? So before you even start looking at the forms, in my mind, I would be recommending people to start to compile some of these pieces of information. So your average full-time equivalent employee count. These 5 periods need to be available if you know that you're going to possibly need to meet the safe harbor or you're not sure whether you meet it. So A, you want to get the full-time equivalent employee count during your PPP, used in your PPP loan application. B, during your covered period or your alternative payroll covered period. C, during your period between February 15th and April 26th. D, for the payroll period inclusive of February 15th. And then E is the June 30, 2020. Again, we're not going to go through all the calculation here, but I think this would be a good start for you to use. Okay, continuing on that point, there are 2 different options available to figure or to calculate your average FTE, which can be found, on page 7 of the application. A, for each employee, the average number of hours paid per week divided by 40 and rounded to the nearest 10th. And B, a simplified method that assigns a 1.0 for employees who work 40 hours or more per week, or 0.5 for employees who work fewer than 40 hours per week. That may not be advantageous for everybody. So again, you would need to consider that yourself. And that they are giving us, you may choose which option you are going to use. There's nothing mandating whatever you use for your application. So I wanted to let you know that. So then what do I do with the FTEs? Well, like I said, you're going to start with the PPP Schedule A worksheet. Okay. You're going to need to fill out tables 1 and 2. So within those tables, you're going to be including each employee during your period, and you're going to include their average FTE during their period that you choose. Okay, and then you're going to total those up. On the second half of that worksheet, there is the calculation for the FTE reduction safe harbor. Okay. Again, you're going to list each employee's average FTE and calculate for each of these periods. So what I've learned is that you may either, if you're doing it manually, you might want to make 4 copies of that worksheet and then list each employee out for each of those periods. Or if you've got your Excel, then you do that. But just be careful because there might be different employees for those different periods. But again, you're going to need to list each employee and include that. And then you're going to total those, and those will be part of the calculation. Okay, let's see. So there are 5 steps to that FTE reduction, safe harbor. Okay, and then from there, the full-time equivalency reduction calculation, that will be on the actual Schedule A, not the worksheet, the Schedule A. You'll need to follow those steps very closely, so just want you to know that. When you finish these calculations, if your calculations bring you to 1.0, you have met the safe harbor. No reduction is required. If your calculations are above, or sorry, I messed that up, sorry, are less than 1.0, it will reduce your entire adjusted payroll and non-payroll costs as calculated on line 6 of the loan application, which is the first page of the form that you need to complete. Again, scratch off that first above on item D, and it should be less than 1.0. And when I say it will reduce all of them, you'll see that on the application. You're going to total all your payroll and your non-payroll costs, and then that quotient will, reduce your full cost. So, whatever that percent comes out to be, that will be, what you'll reduce it by. Okay, and then from there, and then it states how to do it. Again, if you don't have that form in front of you, it's difficult to follow, so I apologize. So once you go through all of these calculations, that'll complete your FTE reduction, okay? Again, it's real difficult if you don't have it in front of you, so hopefully these slides will help you when you go to figure it out. What does a salary hourly wage reduction mean? The actual amount of your loan forgiveness may be less than the full amount, depending on whether the salary or hourly wages of certain employees during the period you choose was less than the period from January 1, 2020 to March 31, 2020. However, if during the period you choose, you then restore their salary and hourly wage levels to where they meet the 25% or less reduction, you'll be eligible for the elimination of that wage reduction, so you won't have to do anything. Do I need to do anything if my employee's salary or hourly wage has not been reduced? If you haven't, there is a box on line 3 of Schedule A, that's the middle sheet, you'll just enter 0. If they were increased, there's nothing you need to do unless they exceed the $100,000 threshold like Ben talked about. You're still capped. And what is the definition of certain employees? The actual definition is found in the statute as any single employee who did not receive during any single pay period during 2019 wages or salary at an annualized rate in an amount more than $100,000. Within the application itself, you will find the definition of certain employees implied in Table 1 of the worksheet. Table 1 includes a column with that salary hourly wage reduction. Table 2, which includes those who have received greater than $100,000, it does not include that same column. That's how you're going to know which employees. And the point is that any amount of reduction for employees who are listed in that $100,000 section, there's no impact. They're okay with people who made that amount of money to have a reduction. So that's the point there. They're looking for those making less than that amount of money. What information do I need to have available when I calculate it? So again, this is similar to the FTE. You will need the average annual salary or hourly wage for each employee for each of the following periods. During your covered or alternative payroll period, between the dates of January 1 and March 31, as of February 15th, between the dates of February 15th and April 26th, and as of June 30, 2020. Again, this is very cumbersome, to listen to when you don't have something in front of you. But again, I thought it was best when you're going to fill this out that information will be helpful. Now, what do you do with the salary, hourly wage information? So for each employee, you're going to figure it out as outlined on steps 1 through 3 on page 7 of the instructions. Keep in mind that there's another page, right after that, those steps 1 through 3, you're going to turn the page, and then there's another one that gives you further instruction, okay? Those last 2 unmarked steps on page 8 are carried to box 3 of your table 1, which is next to each employee that you've listed for your covered period. You'll have your salary and hourly wage reduction. So it's basically going to be the differential of what you had paid them versus what you paid them during the covered period. That amount times 8 weeks is essentially the reduction. So that total of all the employees will then be brought to the schedule. Okay. And then this amount reduces all payroll and non-payroll costs entered on your application that Ben discussed. So this completes the salary and hourly wage reduction calculation. I would recommend that if you were utilizing a payroll service company, use the tools that they would have available to assist you with both the FTE and the salary hourly wage reduction adjustments. If you have not already contacted them, I would not wait until your period is complete. If you are, and I mentioned this point already, if you're calculating these reductions, I would recommend creating an Excel document with the various columns titled for the various periods needed, because you do not have to submit the worksheet with the application, so it's for your own use. Just a couple of closing comments. Continue. Document retention. Please review page 10 of the application, addressing the document retention section carefully. In summary, you must retain all documentation for these applications for 6 years after the date the loan is forgiven or the loan is repaid in full. So again, it's similar to, the documentation requirements for when you, filling out a tax return. But here it's for 6 years. So please make note of that. And then I just want to say, stay tuned for the possibility of further clarification between now and your application due date. There's already a bipartisan PPP bill in the works. And then I'm including the SBA website for further updates, hopefully. So thank you very much. And I think it'd be good to open up for questions.
Yeah, we do have a few that have come in, but before we do that, Tim, why don't you weigh in from a banking perspective, anything you'd like to amplify or advise folks from a banker's perspective?
Well, as Paula and Ben showed, it's a very complicated process. We're at this time, we're really not in a position from the banking side to complete these applications for our borrowers. I mean, when you look at it, it's an application for forgiveness. Typically when you come to a bank to borrow money, you supply all the supporting cash flows and collateral information, et cetera, and we make a decision based on the application documents. This is going to be the same situation. You come to the bank with a forgiveness application, you're going to have all of the supporting documentations done, and this application is going to have to be 99% accurate and complete when we get it. It is telling all of our PPP borrowers that they're going to have to come to us with the application complete and hopefully done by a financial advisor like Paula or their legal advice, and with all the supplied documentation, all of the analysis, and we'll just take the application, review it, and then input the forgiveness amount into SBA E-Tran. So that's, there's going to be a lot more guidance coming out, I presume, around what eligible expenses are, et cetera, et cetera. But from our standpoint, our requirement is just to take the app, determine the forgiveness, confirm the documentation, and go to E-Tran and put the forgiveness amount in. So I just did a quick calculation. So the forgiveness period ends in December of 2020. So if the determination is made late in the year, that leaves about all the loans were 24 months, and they have to be paid off in full in 24 months. So whatever amount is not forgiven, that's due in, between 16, 18 months. So that payment, even on, $10,000, I did it over 16 months at 1% interest, that's a payment of $629. So these monthly payments can be fairly substantial if these aren't forgiven in their entirety, and it's going to be worth the borrower's time and money to get professional guidance and get the forgiveness that you qualify for. And you're not going to want to rely on your friendly banker to figure that out for you. So I guess that's it on a high level for me.
And again, I think all of our panelists would stress just stay tuned to the SBA. This does change. What we've presented today, there may be updates. I think Paula stressed that there'll be more guidance coming out. So just stay tuned to that. So let's start going through the questions that have come in, and whichever panelist would like to chime in. Let's start with Jessica Matson. So for full-time employees, we can choose a different reference period for comparison to our covered period. I thought we had to compare 1/1/20 to 3/31/20 to our covered period.
Can you read that one more time? Because she's compare her 1/1.
Yeah, so she's asking for full-time employees.
Right.
We could choose a different reference period for comparison to our covered period. So that's the question. Can we choose a different reference period? She thought we had to compare 1/1/20 to 3/31/20 to the covered period. And Melissa, we may need to ask if Jessica needs to be brought in. We may need her to clarify if you're not understanding the question, or.
Yeah, I'm still a little.
Okay, so Jessica, I think Melissa's gonna unmute you. Okay, go ahead, Jessica.
Yep, go ahead, Jessica. So I was referencing on page 7 of the 11-page document, the salary and hourly wage reduction.
Okay.
Keeps referencing January 1st to March 31st.
Are you on the step 1?
Yes, so in the paragraph above it, where it's the salary and hourly wage, it kind of talks a little bit about the time period. And it keeps saying the covered period or the alternative payroll covered period during the period from January 1st, 2020 to March 31st, 2020.
Right. As compared to, right. So your covered period as compared to the first months of the year. So during your covered period, whatever you paid versus the period, the first quarter of 2020.
So when I look at that, it looks like that's more weeks than the 56 days that we're using. Okay.
Correct. Yep. But again, you're only coming up with an average.
Okay.
Okay.
Okay,
So,
thank you.
Yes. Sorry about that. I didn't quite understand before.
And Paula, that does not apply to that's not for the FTE count. That's
No,
just
that's
for the
the salary.
reduction in wages,
Correct.
right? Just want to.
Yes. Thank you, Ben.
Okay, and from Greg, are there any issues if your full-time employee count has gone up during forgiveness time period? Are there any issues if an employee's pay was adjusted up during the forgiveness time period?
No issues.
Okay. Offering employees jobs back and they choose not to come back but refuse to sign any paperwork that they were denied their job back because of the acts, unemployment, extra benefits they are receiving, bonus of $600 a week. How do you handle this? I have hired new employees in their positions, so I have brought my payroll back up. I understood the new hire's pay will be covered in this forgiveness loan. Is this correct?
So if it were me, and again, there's nothing in the statute that says it, I would certainly be writing a letter, sending it certified return receipt with asking them to sign. And at least you have something, and whatever you have, you know, even if you were to write down that you tried to get them to sign and, you know, have maybe a witness. I don't know, Ben maybe could help me on that piece, but I would have whatever I could, you know, to prove that I gave it, you know, my best shot to get it in writing. And as far as the new employees, yes, you know, again, that once you know, if for whatever reason, the fact that they won't, you know, sign something, you know, I understand that, but if you've written it, I think that that's the key. And that the new employee is offsetting that employee that isn't coming back, so that will not be counted against you in what I believe that says it in the slide, but that's how I would look at it.
Ben, are you comfortable, or did you want to weigh in?
Yeah, no, I wouldn't have anything to add to that.
Okay, all right, thank you. And hopefully, I don't have a name for the person who asked that question, but I'm hoping that did answer. If not, please type something else in. So Andrew is asking, for a company with 2 owners and no other employees, do you report 2 employees on the first page? And consequently, you would report no reduction and 1.0 FTEs.
Yeah. If you, I'm guessing they're a partnership or LLC filing as a partnership. I guess that would be my first question versus filing as an S corporation.
Andrew, Melissa, can we bring Andrew in?
I was just going to ask if you wanted me to do that. Hold on a second.
If you could, that might be easier. Go ahead, Andrew.
Hey, guys. First off, thanks so much. This was an amazing presentation. Yes, so it is a 2-person LLC partnership, no employees.
So, I mean, the definition of employees is, you're not an employee. I don't see anything off the top, Ben, that would want me to put in you as an employee.
So I guess the other part of that question then is, in the case where there are no employees, how do you document? So for instance, sole proprietorships, partnership LLCs, things like that.
You are going to put on your application, there is a section for the compensation to owners. Andrew, on page 6 of the Schedule A.
Mm-hmm. Yep.
Line 9. So that's where I would be. That's where your compensation to owners. So that's why I wouldn't be calling you an employee. So.
Gotcha. Okay, so then you would say no employees before covered period, no employees.
That's how I would interpret it at this point.
Okay, great. Thank you very much.
Yeah, I agree. You pay, you list your own compensation in the owner, in the self-employed general partner owner employee box, line 9. And then in terms of the reduction, I think you would just get to check the box that you didn't reduce. Your employee count was 0 and it stayed at 0, so it didn't go down.
Yep.
Great. Thanks. That's depressing, but thank you.
I know.
Sorry, Andrew.
No, thank you. That's great.
All right, and it looks like Greg and Art have the same question, and then Greg had a follow-up. So Greg and Art are asking, when is the loan forgiveness application due, or when does it need to be submitted? And then Greg is following up with, when will you know, and maybe how will you know, that the forgiveness application is approved?
So
I believe it's 60 days after your covered period. Is that right, Ben?
in terms of when it has to be submitted?
Right.
I don't know that there's a formal deadline.
Yeah, I know that's what they've talked about.
And yeah, sorry, go ahead.
I'm not aware of any deadlines on when this has to go. The loans are, the interest on the loans accrue. There's no payments. due for 6 months. So the interest accrues, but all that interest is paid by the SBA. So I have not seen any deadlines where it has to be in other than December 31, 2020. That's when the forgiveness period ends, I believe. And the first payment will be due on these notes. If you got the loans in April, they'll be due in October. So the requirements, documentation requirements are the next, for a mortgage statement, the month following the covered period. So I'm thinking that mortgage statements will be out following June. So they'll be out in June or late June. So probably July, August. I would think that August will be really the ramp up time where people will have the documentation they need and they'll have the calculations complete. So that's what we're penciling in as really an August 1 start date.
Yeah, I believe there is a deadline on the back end of October 31st, 2020 to file the forgiveness application, but I don't believe there's a deadline that's keyed off of your own like covered period date. I think it's just, given the incurred and then the incurred expenses that you can pay later, it may be 30 days or more after your covered period ends before you will have paid all the expenses. But I would say from there on, I would pull it together and submit it,
Right.
as soon as possible. But there is an outside October 31, 2020 deadline.
Yeah.
And as for evidence of the forgiveness, I don't know. The bank will have to go through SBA E-Tran, and I don't know what that documentation will look like. So more to follow on that.
Yep.
All right, so Greg, we didn't have an answer for part 2, but that might be something that, will come up in the future, and we'll try to get that out to folks. There's a couple more questions, but I would like to say, Paula kept saying it'd be a lot easier to have, her slides in front of you while you're filling out the application. Those of you who registered for the seminar will get a nice bonus because we can send you just those slide decks. Everyone else who didn't come to the webinar this morning will be able to see the slides, but they'll have to sit through the whole webinar. So what we can do following this is email you Ben's and Paula's, just their slide presentations. You'll have access to the full webinar on our website, but we can email you those slides because Paula indicated it might be helpful to have those in front of you while you're wading through all this paperwork. So let's go on to Karen Hamilton, who says, I am a realtor, independent contractor. April and May are my busiest time. My PPP loan is based on 2019 Schedule C. Can I pay myself the PPP based on the April and May 2019 line 31 instead of the average annual amount used for the PPP loan to utilize the whole PPP loan and have it forgiven? And if we need to bring Karen in to amplify on that, let us know and we'll bring her in.
Yeah, my reading is no. My reading is that it's 8/50 seconds of your full year 2019.
Correct. Yep.
Yeah, net profit. So you don't get to look at a busier or less busy time of the year.
Okay, Karen, maybe not the answer you wanted, but an answer. So then we have from Andrew, this is a question that's aimed at you, Tim. Do you think that banks are likely to accept the same documentation, for example, owner's draw for months open in first quarter of 2020, in the forgiveness application as they did in the PPP application? And we can bring Andrew in if you need clarification on that.
I'm just thinking out loud here. I'm not sure how to answer that. I think that the documentation needs to be provided for both periods of time that you're looking at. Again, maxed out at the $15,385, I think it was, for the owner's salary. Am I getting that right, Paula?
Yeah, bottom line is it really is coming down to the 2019 net income, like we've talked about. And then on the loan application, you know, it is asking, you know, one of the things that you have to sign off as an owner. Sorry, I'm trying to look at the line here. I'm just trying to see, there is a thing here for those that are self-employed.
At the first thing at the beginning, that it does not exceed the 8 weeks.
Yeah, no, I thought it was on one of the questions that you signed on the second page, Ben.
The certification?
Yeah, that's what I thought. I thought it had something to do with the self-employment, but okay, here's what it is. Yeah, it's that first one. Does not exceed, so the dollar amount for which forgiveness is requested does not exceed 8 weeks worth of 2019 compensation for any owner, employee, or self-employed individual partner, capped at 15. Now, as Ben described the compensation, it's really, you know, your net income. So as owners, you're not compensated like employees. It's your net income.
And to further answer the question on documentation, there's page 10 of the application, the PDF, which, by the way, I did put a link in the chat to the PDF
Yeah.
if anyone doesn't have it and wanted to download it. But on page 10, it lists out what documentation is necessary for payroll, FTE, and non-payroll, and what documentation you have to maintain, but you don't have to submit. It doesn't perfectly answer your question, but I do think, you know, because it's not an employee who you're paying, but I do think, you know, equivalent bank account statements documenting the amount of compensation. So if you're transferring from your business account to your personal account, or if you're writing a check, I think those bank statements or those checks would be that evidence that cash compensation went from the business to you. As Paula said, it is based on your 2019 net profit, you know, capped at 850 seconds. But it all, you know, so there's some question, well, do you even have to transfer it? You know, in effect, if the money's there, have you in effect already taken it as compensation? Maybe, but the interim final rule does say the total amount spent over the covered period on ABCD, one of which is the owner compensation replacement. So I think just to be on the safe side, I think it couldn't hurt to do a transfer from your business account to your personal account of at least the 850 seconds, just so there's some evidence I paid it to myself. Is that necessary? Perhaps not, but given how vague and ambiguous a lot of these rules are, I think you're better off erring on the side of caution. So that's your paper trail. I took my draw.
Yep, and then you can always loan it back, or, you know,
Right.
put it into the company.
Right.
And Andrew did follow up on that. He said he's trying to figure this out for a business that did not have a 2019 return. So I guess that's his dilemma, because he opened so late in 2019. He does not have.
Yeah. So
If I'm understanding that correctly.
Go ahead, Ben.
I was going to say the rules do say if you have not filled out, I mean, first of all, I guess if the business opened in 2019 and is using a calendar year, fiscal year, I assume it would have a 2019 return at some point. But let's say it hasn't been filed yet. The rules do say if you have not yet filed a 2019 return, fill it out and compute the value. So you have to compute what would be on the 2019 return. The rules say for a business that was not opened in 2019, for example, one that was opened right at the beginning of 2020, that they're going to give further guidance. They have not given that guidance yet. I think to kind of circle back on, there was an earlier question along these same lines about what about a business that was open late, from Andrew as well, like late in 2019. I think you're stuck with the full year 2019 850 seconds. I look through the rule. There's nothing that allows you to prorate. You know, I was only open for 3 months of the year, so can I take, you know, and Paula's shaking her head yes. So
My only question is, on the application, they would have to put that amount, so I don't even know what they would have gotten for a loan.
Right.
Besides putting the amount for the business net income. That's the piece I'm still, you know, wondering. Would you agree, Tim?
Yes, that was my question all along, is how was the PPP loan amount calculated?
That's
If
right.
you had to use the 19 net income to, you know, divided by 12 times 2.5.
Yep.
He's saying he got, the business got their loan based on this year's draw.
Ugh.
Yeah, I mean, I do think the rule in terms of the loan amount, the rule is a little bit different than the forgiveness rules. And I think if you were only in business starting in, early 2020, I think that can happen. But then what you can forgive, if you weren't at all in business in 2019, they said they're going to issue further guidance on that subject. So you may be in luck there.
Yeah, that's what I would say. Hold on.
Yeah.
All right, Andrew, hopefully that helped you somewhat. And if we need to continue this conversation offline, or you have Ben's and Paula's contact information, hopefully that will help you. And in the chat, Stephanie Eno did ask about the slides. I answered that. We will automatically be emailing the slides to all of you who did register. I don't see any more open questions. Panelists, do you go ahead? You want to?
I just wanted to clarify one more thing that I did not. I've added it to the slide, so it'll be in the version that gets emailed out.
Okay.
But one thing I did not mention is for the non-corporations, the sole proprietorships, independent contractors, and partnerships, where non-payroll costs are concerned, so that's the rent, the utilities, the mortgage interest, you must have claimed or be entitled to claim a deduction for the equivalent expense on your 2019 Form 1040 Schedule C. So the reason they put in this rule is they don't want new expenses to count. They don't want the PPP loan to be used to rent a new facility or expand a new business or something like that. So they did include that rule. There's some ambiguity. What if you move locations and rented a different facility? I mean, I think you're probably fine there if you had an equivalent rent the year before to the rent now. But the rule says if you did not claim or are not entitled to claim that category of expense on your 2019 Form 1040 Schedule C, you can't use the loan for that during the covered period. So that's just, and again, this is not about payroll. This is just about mortgage interest, business rent payments, and utility payments.
Was that just for the Schedule C or?
Yes, that is just for the Schedule C and partnership folks, not for corporations.
But any of those rents have to be in effect during, they have to be in effect.
February 15, 2020, they have to be in effect.
I was going to say February 15th, so.
Yeah.
But.
Anything else in closing? Still no more questions, and we're getting close to the end time. Paula and Tim and Ben, you feeling good? Or as good as you can?
As good as we can.
As good as we can.
Well, we can't thank you enough. Melissa did add something to the chat, so people, participants who are on the call, what she's saying is if you have not registered through the chamber link, in other words, went onto our website and registered for the seminar, you will have to email us and request the slides. So if you registered through dovernh.org, we'll automatically send you the slides. If you did not, shoot us an email at info@dovernh.org and we will send you the slides. Panelists, can't thank you enough. I know you are all incredibly busy, and we truly appreciate you taking the time to help our members and even non-members. We extended this to really anybody who wanted the information. Cannot thank you enough for taking the time. Please look at our website, follow the SBA. Can't state enough that this all changes daily, if not hourly. So everybody, enjoy the long weekend if you can. Stay well. See you soon, maybe. Take care.
And maybe keep in mind, if anyone hasn't heard of the New Hampshire funds that are available too.
Yes.
The street program. I know Margaret's given information, but.
Yeah. That is on our website. And listen, that does have a tight time frame, folks. You have to submit the pre-qualification. I think it's the 29th. So
yes.
Do look for that either on the state's website or our website. And it's a very quick, real quick pre-qualification. You don't need a lot of documentation just to do the pre-qualification. So get ahead of that if you can. And
one last thing, and I'll be quiet. There are still there's still plenty of money. If you know anyone that's still for the PPP monies, there's still a lot there. So,
Yeah, I was thinking that too, Paula. Yeah, if you haven't applied yet, you still can. So sorry, Tim, they may be calling you.
I don't
All
speak
right.
English.
Everybody.
okay. Have a good weekend.
Everyone. Bye-bye.
Bye. Bye.